Jennifer, come in here. What do you make of this? Because we were expecting a bit of concern here about what's going on with the same-store sales, and we've got a bit of a weakness here in terms of the numbers versus estimates.
Yeah, so the numbers came in okay. They were weaker than estimates, but not as poor as some of the buy-siders were anticipating. So what's important about this is it does signal that Starbucks has been able to overcome some of the operational issues that it was experiencing in some of its U.S. stores.
Scott, when we were talking before in a previous show about Amazon, you were pointing out the death of brands, in that we went from eating Greek yogurt to niche Icelandic kefir. How does Starbucks avoid that in bleeding all their customers to the blue bottles and other coffee shops that are more trendy right now? Or can they ultimately hold that off?
Well, what you're seeing is the death of broadcast advertising, and the traditional advertising is effectively becoming a tax. Only the poor, the technologically illiterate have to pay. How do you know you're wealthy? You get to opt out of advertising. You're watching Netflix, or you're watching HBO, whereas advertising or marketing is still very important at the store level, as evidenced by what is probably the smartest, most value-creating move in history of business when Apple decided to do this crazy thing and forward integrate into stores. And Starbucks was the original gangster and said, we're not going to advertise, we're going to pour all our money into this incredible point-of-purchase branding thing called a store. And they continue to be one of the most impressive companies in the world. I'd be curious if your analyst, Jennifer, got any information or has any new data on their mobile app, which is arguably the most successful mobile app in history in terms of purchases.
Jennifer?
Yeah, so with regards to their mobile app, transactions are at a higher level than almost any other QSR type player in the industry, with the exception of Domino's Pizza. But what's impressive is that 30% of their transactions are now paid for over their mobile app. And that's an unprecedented level, and it really indicates how they're resonating with people and being an on-the-go, transitory type of brand.
We also see that the third quarter comparable sales disappointed on weakness in China and the Americas. And I found this interesting given that, Scott, Starbucks just made its biggest deal ever, $1.3 billion to buy the rest of its Eastern Chinese joint venture it didn't already own. I mean, that's a huge bet on China, but so far it's not necessarily hitting China on all cylinders the way it wants to be.
I don't know. I look at this and I say, wow, this is the perfect earnings release, up 4% year on year, which in this economy sounds pretty good. Oh, and we're getting rid of 3,300 people. I mean, that seems like the perfect earnings release for the marketplace. We're cutting costs while things go up 4%. They're one of the few Western brands that has seen the sugar high of growth in China continue. Whereas a lot of Western brands got a lot of initial bump, and now they're struggling as local players move in. Starbucks seems to have this built-in IP and continues to realize its aspirations in China unabated.